Morning, it's Chris from Solstice ATR as well as Axel. You can find us on the websites, Instagram, Discord, as well as YouTube. The YouTube video is for free for everyone. You can subscribe, hit the subscribe, it goes to your email, share it with your friends, give us your commentary. This is for educational use. We're not a broker dealer. Past performance doesn't give us any indication of future results, and we use this adaptive algorithm solution that's built by traders as well as people that used to be in the brokerage world to trade the markets. It doesn't matter what instrument you are trading. Let's go to the first slide that I have up here. And what I wanted to show you here on the Nasdaq 100, which is the QQQ on the electronically traded funds, micro NQ, which is the mini Nasdaq, or NQ for the regular future commodity trading, or you can use the NDX for the Nasdaq 100. I put here the value area high. Think of it as all this volume down here that we collected throughout the year. This is the total volume where most price has acted, is the point of control, and it has a label back on the left. I put it on the left. Value area high, which has the label down here on the left, and the value area low, that green line I put low. It shows it here as a label, but I put it on the left to separate the moving averages, the 200 SMA, the 250, 200, 116, 50 simple moving average. The 18 is just right above the 50, so it's overlapping the 38.2. So these two labels are not going to show, except the dominant one, which is the 50. The 18 won't show up, and the 5. So, and we have the Fibonacci retracement from prior month high to this low in January. You can see that we looked above and we failed these three areas. This is consolidation, which is now becoming supply. This area is considered supply, or, at the bottoms are considered demands. And we looked up and we failed on Friday. After Monday, we had the AI issue in the Asian market, China announcing it. We had that big drop, the rally back up. And on Friday, the White House announced that they're going to start the tariff February 1st. The news that was out was saying it's in March. They said to them, no, we're starting for Canada, Mexico, as well as China 1st of February. And we had that big drop in the Nasdaq 100. So I am paying attention to that 50 SMA, and F3 should be like F6 because it acts as resistance coming to it. If it doesn't and we have a big drop in the overnight, I'm paying attention to the value area high. That's a big, big number. In this consolidation here, when we looked up and failed, we created a W. We tried 3 times here. Eventually, we looked down when we broke up, came back to it, looked under it, rallied higher. So this area of consolidation, I consider it a very important area, was the 116 simple moving average on the backside of this open cone in the Nasdaq 100. I hope this is helpful to teach you how to use the daily. You can use the volume profile on daily, hourly, 4-hour, 5-minute on an intraday to help you if you are trading above value, inside the range of the value area high and low and point of control, or you're trading below the value area low. And if you want to learn more, let us know. Here's the sectors that I put up in November 30th in 2024. I said pay attention to the S&P 11 sectors in the S&P 500. The Mega 7 does not include Netflix, but I included Netflix and I call it the Fantastic 8 or the Mega 8 on my end, including Netflix. And you have to pay attention to Apple, NVDA. Apple had the earning report. It looked up and it failed from Thursday to Friday. NVDA is under pressure, and Microsoft and Meta. So I would pay attention to Google, what the earnings going to be, as well as Microsoft in the coming week. The different sectors I would keep an eye on: small cap and mid cap with Schwab dividend, RSP, SMH, which is a semiconductor, TBT is the interest rate, IEF and IEI are the interest rate on the bonds that are showing the 5 and 7 and the 3 and the 10, as well as you take a look at gold. And I said GC or GLD for gold. Silver is SLV. And VU is the value play in the S&P 500. And here are the commodity side: the dollar, the AUD, JPY, AUD, JPY, USD, JPY, USD, Canada. Or you can use these 6A, 6B, 6C, 6J, and 6N for the New Zealand. This is the S&P 500. That's the Nasdaq. That's the RTY, which is the IWM. There is a value one, which is IWN. YM is the Dow Jones Industrial Average. ZF is the bond for the 5, the 10. GC is for the gold, which I put here in GC. SI is for silver, Bitcoin and Ethereum. Whenever Bitcoin acts up, starts to chop up, you have to pay attention to the S&P sector because it will follow. And last but not least is Ethereum. So we're going to trade what we see, not what we think. And you can use the electronically traded micros or the ETFs in those sectors. Let's go to the next slide. And what I wanted to show you here is the E-mini or the SPY or SPX. It doesn't matter which way you look at it or slice it. We were looking at the consolidation. Here I'm showing you 3 months consolidation. The look up, then we fell down, then we rallied back up. We looked up, this is considered a supply area, and this is a demand area down here. But what I did, I put the 5, 18, 50, 83 SMA and 116 to show you in relationship to the prior high and low where the support and resistance are, where the 38.2, my F3 is 38.2, F5 is 50%, F6 is 61.8. That's a Fibonacci from high to low. I don't have the 78 here, and I do not have the 23 here. I can duplicate those fibs to the bottom for extension, those fibs to the top for the extensions on the upside. We have looked inside that 3-month range. We looked above the value. After the Asia market on the AI, we tested the 83 SMA. I said 89, and bounced off it. We had a nice grind back up. When we looked up on Friday, this became supply. We fell down and we called the 60, 58 in our room 50 for a long. We ran it back up to 78. We eventually fell back in, but we closed above that 56. This is an important area, and the 42 to pay attention to it. If we end up losing the 50 simple moving average in F3, we will see F5 for the point of control for the first bounce. If not, if the market opens very hard and harsh, we may see the 61.8 before we're getting in, because this was the consolidation. You can see look up, come back in, consolidate, run up, and this is the consolidation here. This area is going to act as first support. If not, we fall all the way back to this is the, consider this is the canyon, this is the valley, and this is the valley down here. Coming back down below the value area low and finding support at the bottom and bouncing is okay. When we trade, you have to adapt to the trading. Like, as humans, we evolve, machines evolve, they learn as well. So trade what you see, not what you think. Let's go to the next slide. And what I did here, because everybody was talking on Twitter, Instagram, other channels, saying that the volume profile or the point of control had migrated lower. And I looked at it and I go, my data is not wrong. We collect data from CQG, we collect data from Schwab, we collect data from TradingView, we collect data from the exchange from Pershing. We're going like, hey, something is wrong here. The point of control in the 24-hour, because the S&P trades almost 24 hours through the clock. The overnight is this area, which is in gray, and the trading hours in the US is in dark black. The reason why we do that, we separate it to see the total volume where the value high is, value low, and the point of control. You can see the machine labeled it. They said that the point of control migrated to around the 60 area, which does not make sense. And we checked it up on 3 different platforms. This is how the volume profile is designed from different studies to collect all the volume that happens from the trading hours in from midnight all the way to the morning and the open hours. This is the total volume that we have where the valleys are and where the canyons are. You can see that there was 3 different distribution. I'm going to go back to the next slide to show it to you here. And what I did, I separated the volume profile in the overnight, which is the European, Asian market, Middle East market, Then I put the US market, which is, Canada, South America, and all that, showing that the volume up here did not migrate. This is separating the afternoon volume. Even if I include this, and this volume here does not total the point of control that's sitting at the high. So the time spent is a little bit higher. This does not mean, even if we open up very sharp low, be careful of a critical reversal bounce, because the time spent, if you take the highs and lows for the day, your 50% is higher, and number two, the time spent in the 24-hour was higher, so the sentiment may dump and reverse back on you. So pay attention to it. Don't be wrong. Trade what you see, not what you think. Let's go to the next slide. Remember to check us out at Solstice. Get in contact with us. We're here to help you. And let's go to the first slide that I'm going to have up here on the platform on Thinkorswim, which is through Schwab now, since it's owned by Schwab. I'm showing you here the S&P 500. Once again, we use these moving averages on the charts, showing you the 200 SMA and the 116. You can see we are in an open cone, but if I draw a channel up here, what I'm going to do is zoom from July area and August low. You can show those 3 points here. This is a control point. This is a control point or a pivot. We came down, we created a cup, came back halfway where the consolidation was. This is the shoulder, rallied above, retested it, rallied, came back to it, bounced off. We had this gap which was filled here. We still have this gap. We grinded back and forth in that linear regression downtrend channel. What I want to do is put that channel down here for you so everyone can pay attention to it. You can connect this point to this one here. We'll connect it like a little bit more. Let's do this one instead. Oops, exit. Here we go. We put this one to here and this one. This is an important area coming back from the highs and lows, coming to that 50, F5, and F6, filling this gap and reversing back up. And that's your 83 simple moving average between 50, the 116. This is where the area is and the gap. So this consolidation in this area that happened in October, that happened in November, the rally, which is the high. These two areas are considered supply. These are point control points, I consider them. Whenever you have a significant area, the line is longer. Whenever you have a significant that's shorter, this line was very significant up here. So we looked up, we filled this gap, and we failed on it. So for me, coming back down to filling this gap or the backside of this consolidation is okay, but in case we look down and bounce off, pay attention to the 59.88, 59 78, the first one. And if we fall very sharply, the 58.90 area to the 58.82 area, which is this gap in this area, 78, you'll find big support in reversal fulfilling the gap. That's what we call an island reversal, because this is an island. You had these gaps here, you filled them. This is an island. You went, looked to the island and fell back in. This is another island. Where's the second island? It's sitting down here. So in case it falls, be careful of this big dump, then the reverse back up. So we trade what we see, not what we think. I tried to explain it here on the SPX, the Nasdaq in a similar situation. But let's go to the overall sectors. You can see here I have in the Nasdaq 100, which is the Mega 8, I included what? Netflix in it. So we got to pay attention to Apple, and I want to pay attention to NVDA and Microsoft and Google for next week. So I'm going to show you Apple, what happened to it in the, oops, let's go here. And in Apple, you can see when we zoomed in, you can see I put ovals here when we break out of these ranges, retest them, and I put these two zones as big areas of consolidation. You can see Apple came out of that downtrend channel, broke up. It looked above, tried to clear this candle. You can see this area here. It didn't even clear this small gap here. There's a gap here. You can see it. If I get an oval in this chart, and I put it on, I want everyone to see it. You can see it here. If I extend it, edit the property, and I just go to February, let's say I want to push it to February 2nd. So you can see that this gap was never filled. So these islands are very important when we're coming to them if they act as support and resistance. So this is an island by itself. When it rallied here on that report before the earning, it looked up, it failed that linear regression uptrend channel, it retested it, looked above. When it failed it, that was a consistent short coming in through to the support of 18 SMA and F3, which actually says 61.8. If this is going to be the support, that's great. If Apple is going to act up, I'm looking for the backside of this channel, which is coming up here in the 200 SMA, because this is a large consolidation in Apple before it moved up. That 25, 28 area is important. If not, it'll come back to that big area here that I have marked, which is the 212 in Apple. Let's take a look at NVDA. You're going to see a lot NVDA. You're going to see a lot of ovals in here. All I want you to do is pay attention to this consolidation. Last time when we called this big move on atmospheric pressure, we came back to the 100, bounced off, retested it, ran back up. But since we are looking at this area in this major gap that we had here, which we tested, bounced, tested, bounced up, we've been grinding in NVDA, and this, I consider this a little bit iffy for a lot of people that are holding long term. If you own NVDA at 20, $30, that's fine. But if you own it up in this area and you are getting chopped up, this is an island reversal. That big gap is going to be very hard to fill unless something good news going to happen. And I know NVDA, the President Trump was meeting with the gentleman from NVDA, the owner of NVDA, and they were going to be talking about it. I did not listen to the news. I trade the charts. We lost the 200 SMA. That 250 is very important. If NVDA is lost, I'm looking for that area between 113, 105, 95 area for NVDA to find support, which is the $100 range in NVDA. Let's take a look at semiconductor SMH. Most people are not SMH. You can see that SMH since the October, November area, it's been going back and forth, grinding. This is something tell me, hey, something is wrong in the tech sector. Or even if I take a look at XLK, which is the ETF in XLK, and you can see the same issue in it. It's been going back and forth since October, November, December. This is the January of 2020. Now we're going to have February. We have an island reversal right here. If things are going to go south, we're going to look for the lower section, which is the consolidation here in the backside of XLK. Let's micro ES. And I want to use the micro ES to show you how to do the measured move. This is on an annual base. So what we're going to do in an intraday, we're going to go to the daily. We're going to go to time frame. We're going to go to intraday. We're going to use 20 or 30 days. It doesn't matter which way you use it. You can use an hour, 4 hour if you have a big screen. Since here I'm using this laptop which is, for trading, that's built for traders. That computer is basically a gaming machine, so it allows me to run things a little faster than, it's portable. If you're traveling overseas, you're going somewhere on vacation, you can turn that machine on and trade on it. It doesn't matter. So you can see the 5-day price action, and this is the island that it filled. It looked up and fell back in. We are holding the 83 SMA. This 200 and F6 is very important. I think on Monday we're going to open on a gap down. So this area is going to be very important because of the run up. If I take this candle in the overnight action, I'm looking for this consolidation here at the 58, 78 area to the 90 area. That would be very important in the price action, because the up here when we rallied up, that was consolidation, retesting, run up, and you fail. So I look for the backside of this area. So if I do use the measuring tool is very simple. I connect the previous week high, which is Friday to Sunday, and I can extend it to the left. I can edit the property. I want to show you where these levels are. You can do them on your own machine, but if you want to learn how to trade correctly, let us know here to help you out. So from 0 to 100, we have an extension to the bottom, minus 100. From 100 to 200, we have the extensions to the top. And what I do, I'm going to move that back all the way to the beginning of the month. So we're going to go 0, 1, 2025. So you can see it, I pushed it all the way back. Even if I push it back here a little further, it's going to show you where the support, even if we gap down and we end up consolidating in this area, I'm looking for this area to hold because this is the most consolidation. You can see the 25 to 50, the 20% area to a 0 or the minus 50 is going to be a very important area for a small bounce. But if there's going to be continuation, we pay attention to the RSI divergence. Heading in a downtrend, you have a peak and another peak here. As long as this downtrend, when we reach the bottom end, I'm looking for a reversal back up. Let's do it on the Nasdaq. And Q, or you can use the SPY or EXO. I did it on the Nasdaq. See, I had it on here and I left it for the week. So once again, remove the drawing. You connect the highs and lows. I won't connect the whole months from high to low. If I'm going to do the measuring tool for the monthly, I'm going to look at the monkey bars and the volume profile to measure the time spent in relationship to the point of control, if my 50 is above or my 50 is below. And if I do the micro NQ and I go to style in the setting, I'll do this last one for you guys. I go to the monkey bars. You can see here 30-minute daily. You can see the point of control. If I take the highs and lows, my 50% is right here. My open is here and my close is here. If there's going to be a large gap down, I'm going to look for it. But what I'm going to do, go to time frame daily instead of an annual chart. I'm going to use 3 months to show you the point of control. You can see that this profile, if I break it up, and I can show you the highs and lows. You can see that where it is. It's 20,094 and the low is 20,693.50. And even if I draw a Fibonacci on it, let's get a Fibonacci and I take the high to the low and I anchor these fibs, my 50% is almost very close to where I am. What's the high? 22,094. It's on the top right corner. If I move up my mouse here, you can see it up here, okay? And you can see the low here. So let's put the low down there so we can anchor him, 693.5. I used the Nasdaq one for one reason, because my 50%, it can go either way. My time spent and my point of control are very identical. And my highs and lows, where my open is and my close is looking up and failing that supply. So coming to the point of control is very important on the monthly for a bounce and the time spent. So let's see what happened. And if we get a dump and a reverse back up off the 38.2, that would be great. You never know if you can lose, 1%, 2%, 3%, 4%. You look for 5%, 10% moves usually to find opportunities to buy and sell those positions. So this is a good way to do it. At least you have an idea how to look at the Fibonacci. We can go from style. I'm going to go back to style, the time spent. Going to go to time spent. I'm going to go to intraday. We're going to go back to 3 or 4 days, and I'm going to use 30-minute. We use this profile on the 30-minute or the monkey bus to give me a better overall view of the price action in relationship to time spent and value. You can see on that move down, we kind of grinded back up. If I use 5 days here, I'm going to show you the gap down in the profile. This is the Asia market, and we fell back down, but we opened here and we rallied high because that was in the overnight price action. You can see that there was a wick down here and a wick up here on the candle. That means there are exhaustion buyers and sellers at the top and bottom. Like here we have a flat bottom. 2 TPAs doesn't really support as much. When we looked up, we looked above this area and we failed. Even if I go to here to 10 days price or 15 days, I want to show you the compression. That was the gap that we filled between here and here. We looked above and failed on that gap. That was a nice short. If you held it, you came back to the 61.8 fib on the weekly bars. So this is something to consider when you're trading levels on the S&P or the Nasdaq or the equities. So we go back to standard. You can see where the values are. If I come in here intraday and I just go daily, or we do, let's say, custom, we do till November. Let me show you this 24. We're going to use this 1009. 09. At least you can see where the levels are on the daily chart and where those retracements of Fibonacci's can interact with the consolidation between the 23 and the 38. That was a lot of consolidation before the lookup. Coming back down here is very important in the 116 SMA in the backside of this channel. If you have any questions, please let us know. We're here to help you. Get in contact with us. Take care. Over and out.